This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And we are seeing, again, a little bit of a bloodbath as we continue to see forced liquidation in these grain markets, specifically for that corn and wheat market. Not a position that the bulls want to be in ahead of tomorrow's USDA report, which could kind of be an inflection point for the market. But looking at some of the key technical levels, specifically for that May corn contracts, 363 and a quarter is the contract lows from back in September. This is a must-hold area. Break and close below here takes us obviously to uncharted territory where it's a lot more difficult to find meaningful support. So 363 and a quarter is a must-hold area for us to round out the week. As far as the soybeans are concerned, $9 psychologically and technically significant, representing the 50% retracement from the September lows, which were the contract lows, to the December highs. If the bulls can manage to stabilize above here, I think that we could maybe see a little bit more of a range-bound trade between $9 and $9.20. Up between $9.17 and $9.20, you have the 50, the 100, and 200-day moving average. I think the thought or idea that there could potentially be a headline regarding trade with China will put a little bit of a floor in the market, not necessarily at $9, but I think just below that $8.90 is where the best value would be there in the soybean market. Now, wrapping things up with the wheat market, wheat obviously has garnered a lot of attention. We're seeing forced liquidation and just a snowball effect as we continue to roll over very hard as the selling accelerates. Now, this is a very interesting market because we are oversold, but oversold does not mean buy. What it really means is this is not an area where there's value to sell. So we do think there is upside potential here, not only from the fundamental side, but we want to see kind of things shake out as far as the technicals go. The bottom is a process, not necessarily a point. The technicals and fundamentals are conflicting. We want to see the technicals firm up a little bit to get us feeling more comfortable about being an aggressive buyer. So that's going to be something to keep a close eye on here, not only as we round out today's session, but through tomorrow in the USDA report. And really, if we can stabilize next week, I think there's going to be potential. But again, price is what you pay, value is what you get. This has been Oliver Slope with Blue Line Futures from the floor of the CME here in Chicago.